Hi, folks. Welcome to the Weekend Investing Stock Market Weekly Review for the week ended 24th of October. So, very interestingly, market was almost convinced that Indo-US deal is happening, and there was a gap up uh, post Diwali on Thursday, and it just came collapsing down. And later on, Piyush Goyal's statement that there is still deliberations going on, and we are not going to yield so easily, and they can't arm twist us. I mean, the language that was used by him at Berlin, it suggests that there is no deal happening in the short term. At least that's what it seems like. So all this narrative that was built during the Diwali holidays, that a deal is imminent, seems to be a rumor only right now. And markets have rightfully sort of smashed down all that bullishness, but we haven't really lost ground as such. But we are just about where we were earlier. So nothing lost, but nothing gained as well. On the research desk, we had these fantastic stories. Is the bull market still young? And look at global trends. And there was one on changing gold to silver ratio, what it means for investors, the real magic of SIPs, why patience after 7 years pays off. So some case study there. So that was this week. It was a short week. Disclaimer as always, please read fully, understand it. Whatever we talk about here is purely for illustration, not no recommendations, no advice is given in these videos. And do subscribe to our channel. We are now about, I think, 45 or 50% of folks who watch this channel are subscribers. Others are yet to press the button. Please do so. It will give us a lot of motivation. Nifty up 0.33% this week. It was a short week, and uh, trading volumes were also low. If we see the weekly chart, we are pretty much where we were last week, but the setup still remains very strong. So this breakout that happened previous week is still very much in play, and only if this breakout is negated below, let's say, 25,500, which is still 300 odd points away, we are still good for an attempt at the new all-time high, which in my view should happen as soon as we have another whiff of the deal happening. um, so that's the technical position. It's a very, very strong position. There is some sort of a cup and handle pattern also. um, it it is very clear that the market doesn't want to go down. It goes up, but it starts to stutter there, but it doesn't want to go down. We've had all kinds of news from July onwards, which have been negative, but the market has taken that in the stride. Also, the index is not showing the breadth of weakness that exists. So in small cap, mid cap, micro cap segment, lot of weakness is there. But the index on the front, even the mid and small cap index is not showing that kind of weakness. S&P on the other hand is going great guns, 1.92% this week. So people keep talking about US recession and this and that, but the markets there are flying. So now whether this is because of PE expansion, is because of uh, non-availability of other opportunities for people, or excess liquidity, or just demise of money as such, it is just trying to go seek some asset at any point of time. All that is in play, and the end result is that S&P 500 is at a new all-time high of 1.92%. Gold took a breather this week, 3.47% this week. The kind of narrative that has been built in the last week, that gold has stopped, gold has smashed down, gold's rally is over. Just look at this rally. This drop is not even visible in this rally. So don't put the cart before the horse. Maybe once this trend line that we have somewhere around, and this is rupee gold, somewhere around perhaps 1,10,000, 1,08,000. If that starts to breach, then perhaps you can say that there is some real correction that is starting. This is nothing right now. I mean, we have gone up 9 weeks in a row, and we've lost 3% after having gained 30%. So don't read too much into such moves. It would be my view right now. Dollar index is also not falling despite uh, US administration wanting it to fall. Dollar remains the cleanest dirty shirt in the laundry. So 0.4% up on the dollar index. Until this falls, emerging markets will not get that tailwind. So ideally for India, dollar index should fall, and we should get that tailwind for the liquidity boost. This is our proprietary global indices overview chart, which is basically in dollar terms all the indices. This is not available anywhere. You will not find this anywhere else. So this week, the best performing market in dollar terms is Hang Seng China, then Brazil. So you are already seeing that emerging markets are not subdued right now. They're beginning to build up. Brazil up 3%. Then you had um, uh, India, okay, 0.5% up. Developed markets also up very nicely, 2 to 2.5%. All markets of the US, FTSE 2%. Only Europe was sort of flat. Nikkei was up 1.8%. So overall, a very good week for the global markets. Over the last 1 month, also reasonably, all markets have performed well except Brazil and Hang Seng. Over the last 3 months, you have uh, Nikkei doing the best, and Brazil in at number two, and Russell, the smaller cap inclusion, top 2000 stocks of US at number three here. Over the last 12 months, we have Nifty and Nifty 500 the least sort of performers in this entire list, and Germany doing 33.8% in dollar terms. Can you imagine? I mean, the kind of rotation that has happened towards Germany in the last 1 year. Germany is 33.8%, 30% roughly, Nikkei 27%, Hang Seng. So all those people who have been diversifying internationally have benefited this year for sure. If we see the momentum score, then momentum score is Nikkei, Nasdaq, Russell, Hang Seng. These are the top four, and Nifty unfortunately is at the bottom for the entire mix that we have here. Recently, Brazil has started to come up. Recently, Hang Seng has popped up, and Europe has suddenly slumped, and so has India relatively to other markets. In the benchmark indices overview, in the last 1 week, small caps have inched up 0.8%. Nifty almost 0.33%. Nifty next 50 is absolutely flat. Mid caps and Nifty 500 also marginally up. In the sectoral overview, IT stocks have jumped up primarily on the hope of uh, US Indo tariff issues getting solved. And PSU banks have also jumped up 2.3%. There is talk of some monetization, some consolidation within PSU banks and general PSUs by the government. These two really stood out. Indian consumption stocks fell post Diwali, so sort of sell on news and a lot of news about consumption having gone up in the last few weeks of the festive season, and the build up so far has had been happening, and now the sell on news is happening. In the sectoral momentum, you can see PSU banks and metals have led the rally throughout. Metals doing extremely well. Um, Capital markets has been in the top three, now a bit slumping a little bit. Autos also have been in the top four, five, six, now slumping a bit. What is coming back up is real estate. IT is coming back, and central PSCs again backed on based on uh, some government monetization is coming up. Media also has come up a little bit very recently. FMCG is slumping. Financial services and consumption stocks also slumped this last 1 week. So overall, you can make out from this matrix is that the top three, four, five sectors is where you would get most of the setups if you are a bullish sort of a swing trader or a short term trader, and or even for long term. I mean, you could look at this last two columns and see where the long term trends are. Um, the bottom of the matrix is basically telling you where you want to avoid being. You don't want to be in tourism. You don't want to be in energy right now. You don't want to be in pharma, FMCG, for medium and long term. For the very short term, then you have to watch how the rankings are changing. In the weekly advanced decline stats, we are pretty much at the midway mark on most of them. So 40 to 50, 55% advanced decline. So not much of a skew towards either side. So pretty balanced week, I would say. The drop from 52-week high stats has not really changed. You have some very deep gashes in small and mid caps. You can see almost 70% of small caps are down 20 to more than 50%. Uh, Almost 75% of micro caps are down 20% to more than 50%. That number is very, very small in Nifty when we see. That number basically is about 28%. So in small and micro caps, you have three-fourth of the market down more than 20% onwards. In the Nifty, you have one-fourth of the market down more than 20%. So clearly, the uh, the liquidity is still flowing towards the top end of the market and coming out of the bottom end of the market. Nifty Next 50, surprisingly, however, is not uh, uh, reciprocating or mirroring the Nifty trends. Here also, you can see almost 60% of the stocks are below 20% from the 52-week high, 20% or more down. So Nifty Next 50 has not really behaved like a large cap uh, stock trend. Mid caps, in fact, are also like Nifty Next 50 right now. But the major damage you can see here, a fourth of the market of micro cap is more than 50% down. That's a lot of pain, and that's not looking like recovering anytime soon. The percentage of stocks outperforming benchmarks. So only Nifty has 50% of the stocks which were outperforming Nifty, which is very par for the course. This is not exceptional. And what is exceptional is that only 34% of small cap 250 stocks are outperforming the small cap index. So smaller number of stocks outperforming the index means the index is very skewed. One third of the stocks are above the benchmark and two-thirds of the stocks are below the benchmark for this week. It shows that only some performers, some outperformers are there which are keeping the benchmarks up. If we see it over 1 year period, again, it is sort of similar with Nifty still being at 60%. So 60% of the stocks doing better than the average Nifty score over the year, which is a sign that most of the Nifty stocks are doing quite well actually. The strength and weakness within benchmark indices. This shows you how strong or weak each segment is. So golden cross is when 50 DMA crosses 200 DMA, and that is a sign that the market, the stock is in good trend. So Nifty 78% of stocks are in golden cross, which is a good sign. Nifty Next 50 also has 74%, and as we go down the spectrum, that number reduces to about 57, 60%, which is decent, I would say. It is not too bad. The brutal strength is where the trend is strong, and it is also very uniform. Where price is greater than 25 DMA, which is greater than 50 DMA, greater than 200 DMA. So there's not much of whipsawing also there. It's a very smooth trend, and 40% of Nifty stocks are in that smoother trend. So we want to be in that segment. 30% of Nifty Next 50, and then as we go down, that number reduces to 27 and 21% for small caps. Brutal weakness is exactly the opposite, where we don't want to be there. So in large caps, that number is single digit, and mid caps also, but in small cap and micro cap, about 20% of the market is where you don't even want to dip your toe in. So these are no stocks where you should not be there. Some of the examples here of brutal weakness in large caps is Wipro, Tech Mahindra, Indian Hotel, Havels, and Bajaj HFL. So just to give a sample of what stocks should not be there. This is not a recommendation, but that's what the score is telling us. Is the trend improving or declining? So you can see that the percentage of CNX 500 stocks above 200 DMA, for instance, has gone completely flat. So we have been at this 58, 59% for several weeks now. It is not improving. So we are sort of stuck in some sort of a longer term consolidation. However, on the shorter term, the 50 DMA, we are seeing a constant improvement. We have gone from under 40% to about 53%. Uh, and that probably is a reasonable sort of recovery, although we would want to be here, like 75-80% kind of situation where we were in June, July. If we do the trend check on sectors, uh, then this is telling you in each sector what percentage of the stocks in those sectors are above the sectoral 200 DMA. So, uh, for instance, 93% of stocks in metals are above 200 DMA in that particular space, which is very good actually. I mean, 200 DMA is a good benchmark whether stock is in uptrend or downtrend. Good general starting benchmark. Similarly for autos, similarly for private banks, commodities, financial services, infrastructure, all these 80% and above is very good actually. Then you have this middle ground where you have services, manufacturing, PSU banks, pharma, PSC, real estate, oil and gas, which are still doing better than the index average. So index average is 59% stocks are above 200 DMA. So which is about out of 500 stocks of CNX 500, about 300 stocks are trading above 200 DMA. And that's where your setups should look at. And then there are sectors which are pathetically low. Media 40%, 20% on media, 40% on IT, FMCG 46, energy 58. So these are slower or retarded sectors right now, where you have very poor setups, especially for bullish setups. In the FII DII stats, for the last 2 weeks, the stats have gone a bit non-uniform, if you can say. Earlier, you would see every week 3-4 sessions of selling. Now, for the last 2 weeks, we've had only one session of selling, and that also the enormity of the selling has gone down. So I think these are very good signs that FII selling is abating, and there are some days of FII buying also. On the DII front, we've had reasonable buying in the last week. This week, also 2 days was fantastic buying, and only one day was a small sell, and a stagnant kind of a day for the last one day. But when we see it combined, you can see that over the last 30 days cumulative, FII selling has gone flat. So in the last cumulative 30 days of selling, you minus 24,000 crores is what has gone out of FIIs, while 63,000 crores has come in from DIIs. So earlier, this graph was very steep for cumulative 30-day period, and that has gone flat. So since 30th September, so this entire month of October, FIIs have hardly sold anything, maybe a couple of hundred crores only. And in this space, you can see from 30th of September, approximately 30,000 crores have been put in by DII. So certainly that shift is there in the pattern of FII selling, and DIIs continue to buy. So I think this is what is propelling the market to remain in strength, even though there are bouts of selling. But I think the core remains very, very strong. And as soon as you will find this chart starting to go up, if and when it does, you will find a lot of strength in the market suddenly. So that's where we are in terms of this week that has gone by. Thank you so much for watching this. Do keep sending us your feedback about this data. The team really works hard on this. Would appreciate if you can press the subscribe button and give us all some motivation. Thank you. Bye.